When you take a look at the fallout from this tech war between the U.S. and China, what's been the impact on Chinese tech companies and China's own tech ambitions?
Yeah, I think the trade was really unfortunate. The last 30, 40 years, it's a golden age of cooperation between the United States and China. It started as a political alliance against the Soviet Union in the 1980s. Then later on, it blossomed into economic cooperation, technology cooperation. The Americans, they're really good doing something called 0 to 1. You know, it's a popular book. Basically, it's original innovation coming out of the universities, coming out of Silicon Valley. But the Chinese, they're also very good at something. It's called from 1 to 100. It's scaling up. So if when America had an original cooperation, then the Chinese will quickly, spot that invention and popularize it, building applications and scaling up to make it for massive production and for massive computer use. So, give an example. Apple invented the smartphone. Then the Chinese, they quickly coming up with similar devices, Oppo, Vivo, Xiaomi, these companies. And also e-commerce first started in America, but in China, Alibaba followed through and it scaled up very quickly. Alibaba has an even bigger operation, annual GMV than Amazon these days. So, it's really a golden age of cooperation. So really unfortunate that I really pessimistic to see that this golden age of cooperation is coming to an end these days.
But what does it mean for Chinese tech ambitions now that it'll be more difficult for them to scale?
Yes. So basically, we usually see what's going on in the U.S. Oh, what's a new invention in the U.S. and we will copy to China. Then we will scale it up. We'll do even better than the Americans. That has been the pattern in the past. But if there's going to be a technology war, it's going to be cut of information flow between the two countries, which means the Chinese, they have to learn to invent, to innovate by themselves, which is a big challenge for them. It's possible. It may even be a good thing in the long run, but this requires a lot of changes. For example, starting from the fundamental education system, they really need to change from, say, elementary school, the high school, the university system. Also, that many of the fundamental things, such as chips, such as operating system, all these fundamental systems, they used to be able to use American design. They will have to reinvent the wheel. This will take a long process.
Let's pick up on chips. China has said it will ramp up its own chip production as a result of the ban on Huawei, but some say that it will take a decade before China can bridge that gap.
Right. That's the thing. Huawei has actually 10 years ago prepared there's a possibility, a remote possibility at the time that they will have to do their own chips. But although they had this in-house design, but it's never tested in market. With any product, in order to improve it for eventual practical use, you have to go through the process called the trial and error. You have to let users to use it to find the bugs. Then you fix the bugs to make it better, make it more robust. This will just take time. This is not going to happen overnight. So even if Huawei can have their chip design ready, it will take at least a decade. That's I think, a fair estimate to improve it through trial and error to make it robust enough for actual use.
I want to touch on China's startup space. You're invested in WeDoctor, in Jume.com, just few of the many that you're invested in so far. What excites you the most about China's tech space right now?
I think still the tremendous market. And any tiny niche in China, it's a significant segment of market. So for medical, so some of the rare disease, it's rare. In a very small population have that kind of disease. But China, because of 1.4 billion, this kind of population, it's still a significant chance for commercial use. So that's what's exciting.
Exorbitant valuations, though. I mean, globally. I mean, it's venture capitalists. We have sovereign funds, hedge funds, jumping onto the bandwagon. What do you make of valuations? I mean, Uber, Lyft. What are your thoughts on that? Overvaluation?
I think in the PE market, some of the technology company, the valuation is insane. But there is a reason for that, because that in the past, the internet space, this is a particular nature of the industry. You have these called platform companies. It tends to become a monopoly. The companies like Tencent, Alibaba in China, like Amazon or Google in the U.S. So we see companies that in the $500 billion space. So people say, oh, you have the potential to be $500 billion. So I give you $100 billion in the private space. Maybe I can still make lots of money. But unfortunately, I don't think this kind of phenomenon is going to last. The best days of the internet and mobile internet technology that behind us. We have to look for new space, such as artificial intelligence. But unfortunately, I see artificial intelligence does not have the same kind of nature as in the internet space, which you can form some so-called platform companies. So if you cannot be a platform companies, you cannot be a virtual monopoly, there's no way you can achieve the $500 billion kind of valuation.
And you're kind of suggesting that the bubble will burst. If you were to hazard a guess when that will happen, is there a time frame that you're looking at?
I think it's critical to see the companies like Uber and Lyft, how their stock is going to perform in the next maybe 2 to 3 years. If they go below expectations, then I think the private equity space valuation will go down.
John, I'm going to put you at a spot right now. Where will the next big thing come from? Will it be Silicon Valley? Will it be Shenzhen?
I still think that Shenzhen will have a big chance, just because that we still have lots of accumulation in the past, and I think the information flow will be very difficult to cut off. You can in the trade of technology, in the trade of certain goods, you can have tariff and other things, but innovation essential. It's information, right? People travel between different areas of the world so often, and right now we have internet, we have mobile communication. It's virtually impossible to cut off the information flow, right? If you have a brilliant idea, say in Silicon Valley, it's still very easy for the information to flow through to a place like Shenzhen. So I still think that it's very easy for companies in China to follow certain of the new ideas in the U.S. The same pattern can continue, although be less convenient. So I still see place like Shenzhen will emerge lots of startup companies like it used to.
What could stand in the way of innovation in China? What's the one risk you see?
I think I still see the biggest problem. It's the education system, which has been in place for the last few decades. It's the way that the teachers, the school dictate what the students should learn, what the test will cover. So the students, they don't have this kind of a range of freedom to choose the subject that they're interested in, to choose the academic research areas that certain research they want to go into. So this restriction on the academic freedom, on the freedom of thinking, freedom of research, that's impeding the innovation process in China. In order for China to become an innovation country like the United States, this fundamental education system needs to change.
I want to touch quickly on the Chinese economy. Lots of talk that there is a slowdown.
Right.
What's your sense working with all the companies within the country?
I think all the companies that were worried about the trade war, the prospects, whether it's going to be a deal. I think probably most of the entrepreneurs, most of the business owners, they are scaling back because there's uncertainty. Possibly it's not going to be a deal anytime soon. So they are watching, they are holding on to their investments. So I think in the short term, we're going to see a slowdown.
Is there confidence that the Chinese economy and the central bank can provide that buffer, that there are enough tools within the toolkit to engineer a soft landing?
I think certainly the government, the monetary policy makers, they're going to inject more liquidity into the system in order to boost the economy. However, I think still the business owners, they're the decision makers. You can give me all the credits you want to give me. But if I worry about the future, I wouldn't deploy the money. So in that sense, that we still see the economy will slow down.